Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Just about 2 minutes away from the end of the trading day, the trading week. Caroline Hyde and Taylor Riggs counting you down to the closing bell. Here to help take us beyond that bell, it's our global simulcast. It is Tim Stenovec, it is Katie Greifeld in for Carol Massa, and we together bring you our TV, radio, YouTube, and quick take audiences to really go through what were the crucial moments of a topsy-turvy day. We went higher on the back of good news being good news. We plummeted back into the red, and then now we finish up more than a percentage point, Tim.
So is it good news is good news or good news is bad news?
I think good news is good news on the day.
Yeah,
and whether that's China news or US news, I'm yet to decide.
Okay, well, I was asking specifically about US part. I guess I should have actually clarified that because so much this morning was good news is bad news when it came to those job numbers. Hey, we just had a great chat with Alan Zafran, the founding partner and co-CEO at IEQ Capital. He's left us with a pretty optimistic tone. He said it's still possible to avoid a recession and kind of echoed what Fed Chair Jay Powell said on Wednesday when he was asked the same question. He said that if we do hit a recession, it could be okay for a lot of people because we have stronger balance sheet as consumers going into this, and companies, Katie, have stronger balance sheet as well.
Exactly. I mean, depends on obviously the depth of the recession, the time. But to that last point, Tim, when we think about the default rate, it's so low, so historically low. Just another interesting quirk about this potential recession that we're in or are entering. Seems like a lot of people think that it could remain at those levels.
We just had a great conversation with Jason Katz over here on the TV side about the psychology of these big drawdowns and the pain that it makes you feel and the courage to stay invested and having that appropriate asset allocation. Caroline.
Yeah, really, we need to be still, people want to be in cash in this market. Today, we tentatively go into stocks, and I think it's so notable that volumes are indeed higher on the day. We wanted to be long this market into the weekend. We saw, on average, your volume up 16% on the S&P vis-a-vis the last 20 trading days. S&P 500 closes up 52 points, let's call it. We're up 1.4%. The NASDAQ up 132 points. That's 1.3% on the higher side. Now, I will caution you that both benchmarks are down on the week. We're down more than 5.6% on the week for the NASDAQ, for example. The Dow is up 1.25%, and Dow really has continued to march, and we're currently up 400 points at 32,404. Bring it out. Let's have a little look at what's happening in terms of your Russell 2000, though, because we are, too, marching up more than a percentage point on your small caps.
Quite broad-based. I'll let Taylor go through the sectors and the industry groups, but when it comes to numbers, we saw more than 400 stocks move higher in the S&P 500 today, and only 99 move lower, Taylor.
Tim, it was really broad-based. Take a look at the sectors, a few levels underneath the surface, and there's a lot of green even in the, quote, worst performer sector. Take a look at the best ones. It's semiconductors, getting some durables, some materials in there. Thanks as well when you think about the yield story as of late and the climb higher. So you're getting sort of the classic value stocks that are coming back and providing a lot of leadership here today. To the downside, Katie, there were only 3 sectors in the red. It's communication, it's hardware equipment, and it's auto components. It's really auto components that were the only sector in the red. You're off about 2.6%, but really it has been a decent day for breadth.
A decent day for breadth. Yeah, it was easy to find some gainers. Found some really interesting stories here. Let's start with Starbucks, one of my favorite places to go in the morning. We broke the earnings yesterday.
Katie texted me the other day and said that the Starbucks that she went to ran out of cold brew.
Yeah. I don't get it.
Does that
you get
happen?
Free coffee.
That's what I tell her all the time.
Why
She gets free cold brew here.
Soy sauce. It's about the little joys in the world. I don't know. In any case,
Frivolous.
Starbucks.
Frivolous, Katie.
There's a lot of people like me because we know that the fourth quarter comp sales beat estimates. China didn't look so great, but North America did a lot of the heavy lifting here. Shareholders were thrilled. Stock up 8.5% or so. We also talked a little bit about Block, another good day for this company. Its adjusted EBITDA beat expectations. In particular, you had Wall Street analysts singling out the performance of Block's Cash App business. The stock closed about 11.5% higher. Monster Beverage. This story is so fascinating. There was a really good article by Joe Weisenthal on the terminal that, I mean, Monster, it's just been impeccable. It crushed it on margins. It's at an all-time high right now, finishing up another 7.5% today. And Joe looked back to 1997, 333,000%. Did I get those numbers right?
Is that good, Katie?
It seems
better than
really
crypto.
good.
Seems pretty good.
Yeah, right?
All right, so the lesson is go back to 1997 and invest in Monster.
Yeah.
Got it. All right, let's talk about some of the decliners today. There were some pretty prominent decliners. I just want to start with a couple headlines that crossed the terminal. DraftKings is down 28% today, biggest drop ever. We also saw Carvana tumble to a record 39% to close at $8.77. Let's talk about the three that I chose, though. Tesla finishing the day down by 3.6%. It is the biggest drag on the S&P 500. Cloud stocks got really hit hard today. We saw shares of Twilio down by double digits, Atlassian down about 30%, Twilio down more than 30% after we saw weak results from them. Salesforce taking a hit as a result there. Salesforce actually down for a fifth day in a row and hitting a new 52-week low today. And then Warner Brothers Discovery reported after the bell yesterday, shares down close to 13%. The company said that third quarter revenue missed expectations. Analysts see weak trends when it comes to TV advertising as a continuing headwind.
Advertising the headwind, but also what was a headwind today for the dollar at least was that jobs number that came in and ostensibly crushed it, to use Katie's turn of phrase. We are seeing, though, overall, still maybe some weakness underneath the hood. And I do want to shine a light on some of the unemployment data and indeed some of the worries about female participation, people of color being left behind. But at the moment, we do see a number that exceeds 190,000. We see Bloomberg dollar index weakened by the most since 2020. What does that mean when you've got Singaporean dollar surging 1.4%? Because that also takes some hope, some prayer, some reporting that is indeed China maybe will be easing some of its own COVID restrictions. The loonie having its best day since 2020 in terms of strengthening some 2%, that on the back of oil's move as well as the dollar goes lower. Aussie dollar up 3% on those hopes to do with China. So really an extraordinarily volatile FX space. And indeed in commodities as well. I'm looking at WTI crude up 5%. That back up to a 92 handle. I return my earpiece because overall I don't want to lose my Brent crude up $98 at the moment. This is all on the back of the hope of demand coming from China, the second largest economy, the biggest overall net buyer of oil. We look at nat gas up 8%. Steel, we saw some of the metals do. Zinc up 4% on the back of that China news and indeed helped by dollar weakness. And I'm looking at what is a pretty mixed picture in terms of yields pushing higher generally. The Aussie yield coming down a little bit, but that was at the front end and I feel that that was similar in the US, Taylor.
It was such a wild story, Caroline, when yields are actually falling on the front end of the yield curve. For a 2-year yield, you fell for the first time in 6 after rising for 5 straight days. Finally, a reprieve here. Same with the 5-year yield. Finally, yields are falling, but 10s, 20s, 30s yields are still rising, and out on the long end, you're up 9 basis points on the day. For the week, though, overall, it has been a story generally of yields are rising. You really see that on the 2-year yield, where we finished last Friday at 440, and we've migrated northward again to 466. Again, Katie, this is a big week of the Federal Reserve and those meeting the jobs numbers this morning that has the front end, as always, back in focus.
And we have so many data points to look forward to next week's CPI. But to the point that you made on the dynamics of what we saw along the curve, you add that together, you did see the 2s10 steepen a little bit. Now it's at negative 50 basis points of inversion. What was the size and scope? It was the most inverted in, 40 years?
Since the 1980s at one point. When we woke up this morning, that inversion was negative 62 basis points. You recovered some of that. I think at 50, you're around the inversion levels of 08, of 2000, but you're getting close to where we were back in the 80s. And Tim, that hints that there might be a mistake, if you will, that a soft landing is becoming a less probable one.
Well, Taylor, I want to give you a shout out here because you just put this in the chat, but a new story from our own Chris Yancey about, sorry, what was that, Caroline?
Multitasking.
Well, yeah, I mean, well, this is a good one.
I mean, talk. I mean, we've got an IB going. It's
tweet at the same time.
Former Treasury Secretary Larry Summers, he's on Wall Street Week tonight with David Weston, and he gave an interview, and we might think back to that was sort of the pivotal moment in the press conference with Jay Powell on Wednesday, was when he talked about the terminal rate, and it might have to be higher than what the summary of economic projections said back in September. And Larry Summers says that number could be as high as 6% now. So forget 4.6%, 6% is what Summers says.
Rick Reeder, Caroline, was hinting at similar, saying that the Fed might overdo it and then don't worry, we'll just cut later and figure it out. But there has been a sense of maybe we're all just a little bit sort of driving blindly here a little bit and just maybe overshooting is better than the risk of not doing enough.
And that is what they've said. time and time again that really to leave inflation unchecked is far bigger risk than to overdo it and to impact, of course, the unemployment level and the labor market as it stands. But here is the Federal Reserve. It's still macro trade that matters. We thought the micro would consume us. We thought the technology sell-off, for example, the earnings would draw us back. But overall, this is still a market that trades on macro, and we look ahead to CPI. I'll be interested to see how much politics has to play in terms of the moon music next week.
And speaking of politics, speaking of CPI, let's also talk about the oil move today. We're looking at crude up almost 5%, back above $90 a barrel. You have to imagine that's an inflationary impulse if it holds.
All right, that is going to do it, though, for our cross-platform coverage. Have a great weekend, everyone. We'll see you all next week.
You won't.
I won't. I'm going on vacation. I will miss you all.
Enjoy.
Thank you. That is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, and YouTube. A reminder that it's also available on Quick Take. We are simulcasting at Bloomberg Business Week. We're back Monday, same time, same place.